Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we'll look at here is a chart of the market. This is the mini S&P 5. This is mini mid cap. I am so sorry about that, but we're looking at an intraday chart. We'll look at our proprietary dynamics as we usually do in a second, but right now we're looking at our EMDS trading model. As you can see, it's off to another amazing winner. Bought at 65 in EM. You're looking at about $3,000 per contract, so it's about a 60% gain or so on the position. Absolutely incredible. Having said that, we did just weather this particularly nasty loser, so that wasn't any fun. But as you can see, there are couple impressive winners right before that. We can go ahead and take a look at this performance report, and as you can see, green dot. We still got to work on that green dot portfolio that we've been talking about. But $90,000. Let's see what the drawdown is. This is factoring in, I guess, about $20 in subrogation and commission deducted. $10,000 account size. That's the drawdown. $200 every time you place a trade. That's what you can expect. $200, $200, $200, $90,000 over the last 9 years or so. Particularly impressive. So we're going to go ahead and switch back since we were looking at that. Now we're going to go ahead and switch over to our intraday chart. This is our proprietary indicators. 1397 is the last call in the ES, and everybody loves an up market. Not too bad. We're up 10 points on the day. The real impressive move was the day prior. Today is, of course, the 26th day of April 2012. Sorry, 2012. And again, looking at a trade recently over the last few hours or so, we've had a bust above the prior day's highs, so particularly impressive. We'll look at a daily chart in the market in a second, but it's just been all green. These are, again, our proprietary indicators. Green means bullish, red means bearish, green, 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 green. Overwhelming was the bullish bias yesterday, so we're particularly comfortable with our long exposure. Been net long, couple of contracts, MBO, matte black original. As I look over here on another screen, long 6 contracts right now, but surprisingly it's only up about $3,300. But I'll take it. $3,300 for the day's work, not too bad. Given that the market's only up 10 points. But what it says though is that we've been right. We have expected the market to continue. We had that fake out move recently, just to go down and retest, kind of a fake out move. The markets are always looking to fake out, particularly amateur money, the weak hands, so to speak, and that's exactly what we did. Actually, we'll look at a daily chart and talk about that in a second. Right now, are there any free informational day trades? Obviously not. We're right at 1400 on the market. We are officially 100% bullish. We're above not only the early session highs, but above the prior day's highs. We're full out green, green, green. This indicator XDiv1 sometimes does march to the beat of its own drummer, so we tend to discount that. That would probably be the 7th in influence. And of course, bullish. The trend is bullish, so technical is bullish all the time. And that's a quick look at the daily. We're going to go ahead and minimize that and look for a chart of the daily market. We actually just need to. There we go. This should be it right here, and we'll just move that over for you guys. Oh, a little too much. A couple more. And we're going to look at a daily chart of the market. That was our free system. Beautiful. What a beautiful thing. Now this, folks, is for our intents and purposes, our key measure of the market bias. This blue line here. And as you can see, we had the double bottom. We now have a double bottom. And this is what we were telling our clients. The market coming into yesterday now has a double bottom to work with, particularly coming in today, a double bottom to work with, which means the bulls will certainly have the advantage. And of course, they have with another 10-point gain. As mentioned, 1350 becomes the fulcrum. As you can see, it's been twice tested. But here's the fake out move that we had, the breakdown below not only the short-term measure of trend, but our key measure of trend in the intermediate term. So this should actually read bullish now, since we do have not only a close back above our short-term red measure of trend following support resistance, but we're now 2 consecutive closes. We're going to net higher above that mark, so this will turn to bullish at today's close. Uh, from a directional movement perspective, a little choppy, but the bullishness obviously emerging. From a momentum perspective, a little choppy. We're at the zero line, but you really just have to look at price. And what we're seeing is a double bottom at the 1350 level and breaking back up. We've been bullish since 11:30. We went to officially bullish at 12:30 or so, and almost got to 14:30 for a 200 point official 300 point unofficial trade setup, and the whole time we've been looking for an opportunity to add to our long exposure. We haven't really gotten that yet, so we're just holding officially bullish. If we would have gotten it down to about around 1300, we probably would have issued that signal. And actually, I take that back. I believe in the text of the video email that you receive, we may actually have added to exposure on an official basis around 1360. If I'm not mistaken, we'll have to check that email. But from the verbiage here, it's still long, 100% on the long side is the bias, officially speaking, right at 1400, even though we're right at 1400. So we should probably hit this nice little retracement. We should probably hit 1450, maybe even 1500, assuming the market continues to follow through. So having said that, let's a quick look at the intraday, the daily. Here's the free system. Again, hasn't really had any trades in terms of the sentiment picture. We're not seeing too much complacency. Look how much the market has come over the last few days, and we're not even seeing relative extreme levels in complacency whatsoever. So it's particularly impressive. The market definitely has higher to go on the upside. The VIX, kind of a secondary indicator, can go lower and can stay lower around 15. Exactly. Here's a case in point right here. Low, 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 low. So I think we're going to be headed back there, and the market is going to be moving higher in all likelihood. So we're going to go ahead and minimize that. Go back to this. We'll look at a few of our platinum models. Here's the EMDS that we mentioned. EVR3 VSR got kind of whacked yesterday, so nothing good really happening today. MRC and PTL. Beautiful long setup. Look at that. Long at 68, almost $3,000 per contract for the MRC and PTL. After closing that huge winner, this loss will be canceled by that one. This was a scratch trade, and here we are back with another $3,000 in gains per contract. Again, this is a lot. Actually, no, this isn't really like the EMDS. That's 90,000 sure over 9 years, $10,000 count, $200. MRC and PTL, a little different. Watch this number right here. Bam, 193 up to 766. Again, 9 years. Draw it so your average trade net profit almost goes up 400%. And your drawdown, your maximum drawdown after slippage and commissions drops almost in half. So pretty impressive system. MRC and PTL. R30C, we'll see what that's doing. We can just minimize that. Beautiful little winner there. Very nice little winner. Just taking a back seat today, though. Over the last couple of days, there's that beautiful double bottom. Absolutely beautiful. Everyone loves a market that's going higher. Nice little winner there. Winner there. Scratch. R30A. Go ahead and got a little bit there. Not too much going on. A couple losses. So R30A, not too much going on. CBR, not too much. EVMCM, not too much going on. ISRD, banking the winners again. Closed out, unfortunately, a little too early. But look at these winners that it just keeps putting up. Beautiful winner. Beautiful winner. On the short side, beautiful long, exited a little bit early, beautiful long, scratch those two right there, and another beautiful short trade. We're talking about 80 down to almost 60, and then 60 back to over 80. That's how you want to trade, folks, right there. Hitting it on the short side. So what if you forego a little bit of profit? As long as you're putting up winners, you're going to have. We'll take a look at the performance of this model. 13 years, 100 grand. Not too bad. $200 every time you can put on a trade. Take a look at the performance graph. Green dot. Of course, EVR3. Take a look at that. Green dot. $300 every time you put on a trade. Only $4,000 drawdown. It's unbelievable. Here's the ES30MX, $400,000 in the profit. Of course, you're going to pay for it. $32,000 is your risk. $200 every time you place a trade. A couple of winners, 3 winners, and 1 arguable scratch. But that doesn't look too bad there, does it? Bam, bam, bam. Buy, buy, buy. 5 contracts long, all for a profit, and then these scratch, and then 2 more winners. Foregoing a little bit there. That's ESM30X, and here's the actual ESM30. Catching almost the same trades. Very similar. So that's a few of our platinum models, and it's kind of where we stand. We're going to have, I know everyone's been wanting to know the numbers, even though we show you just about every week how we're doing. And of course, everyone still's been interested in our numbers. What the issue that we ran into, we're going to go ahead and switch over and look at the website. The issue that we ran into was actually you had a bit of a divergence. You have the well, let's just click on the right here for the PR100. That goes through February 2nd of 2012, and the we generally update our returns quarterly. So since these went through February 2nd, these weren't due to be updated until May 2nd. So it's, you know, a lot of people are looking for our numbers April 1st. But we just pushed it back another month just so that we can maintain our arguably fiscal quarterly report on our performances. But they will be out in a couple of weeks. So it's a PR 100. So these we'll actually update these as well. So these are big portfolios, and we actually have on the live tracking from SR. If you go to, let's say, the MSA UDT, you can click there for live tracking, and that'll bring up everything, that amazing year that we had last year right there, and that goes through the end of last year, December 30th, 2011. So that traditionally would have been updated. This should be actually live, but we moved it to quarterly, and should have been updated you know, about 3 weeks ago, but we elected to push this to combine these in with the updating of our larger MB250 and PR100 portfolios, which are on that February. So it's all going to be essentially every 3 months from, and you know, if you're looking for we get this a lot of times. Now, if you're writing in as a prospective client, you're wanting to get started, what we always recommend is, how are the portfolios doing? Write in and say, how are the portfolios doing? If you're wanting to see, oh, it made $5,000 last week, if that's what you want to hear, to be able to become a client, to get started, that's what you need. It's probably not going to be the best fit. I mean, it could very well be, and you could go on to make a lot of money with us. But what we like is, for you to look at the bigger picture. We target returns of 1, 2, 300%. We target real returns of 100 to 200%. You could make, I mean, look at this. This does not include slippage or commission, although SR does a pretty good job at mitigating slippage, but it does not include commissions. So you're looking at MSA UDT, a $10,000 portfolio gaining $47,000. You could literally back $17,000 out of that and have $30,000 at 300% real return. Even if you back that out of there, it'd probably be closer to about $7,000 in commission, maybe extra slippage or what have you. So definitely look at the bigger picture. You definitely, number 2, want to take advantage of drawdowns. We just had recently MSA UDT gained a couple of weeks ago 10%, $3,000. I think it gained the next day another couple $1,000 if I'm not mistaken. Well, we can see it right here maybe. Here we go. So the MSA UDT made 50% in 3 days, $3,000, $1,590, and 190 in 3 days. And what we had been espousing to you guys is that the first quarter we had looked had a drawdown in MSA UDT and Delta DTS of around 100%. $10,000, and we actually have an aggressive version of Delta DTS, a $10,000 model, which takes this figure from Delta DTS from 424% to 637% return. The aggressive model trades 9 contracts, either 15K or 10K, 9 contracts being $4,500 in margin. But we definitely were alerting our clients the time to get involved is always after a drawdown, and that's exactly what we've had. It's still not too late, even though the portfolio made 50%. We'll have to wait and see how it's done actually for the month. But it's a great time to get involved with that, given the drawdown. So, if you guys have any questions, getting involved with it is pretty easy. All you have to do is shoot us a couple questions. Make sure you're comfortable. Make sure it's a good fit on both sides. That you're using risk capital, 10 to 20% of your total portfolio. That you're not just, we don't really recommend. I've got $10,000. I just want to, gamble it or whatever. We have no interest in any kind of mentality of that sort. We're here to make long-term relationships, clients, and make you money over the long term, assuming you take our recommendations, and that's not pull at your gains all the time. To keep your cushion for an emotional cushion when we have drawdowns like we just had on the first quarter of this year. I mean, 100% drawdown. That's pretty good, especially if, let's say, you started with $10,000, you made $10,000, and you decided to add another portfolio before there was a drawdown. So you put another $10,000 to work before you had a drawdown, and then we had the drawdown, and you had double your exposure. If you've had double your exposure, then that's going to be particularly unpleasant for you. Double exposure, you're not going to be able to weather drawdown. The drawdown is going to be double. It's just not a good thing. So always take our recommendations on when to allocate capital, when to add to portfolios, and that's it. Getting started, just shoot us a few questions. We'll send you a welcome letter with a link to fill out an online app. Some of the nation's top futures firms. Just open an account, fund the account. Broker handles everything from there. You don't have to have your computer logged on. You don't have to be near a computer. The broker handles everything. It's all fully automated, runs on back servers. All the execution is near instant, and there you go. If you have any questions, shoot us an email to MiniAnalyst.com or go to the website, chat with Support Team Live. And hope you enjoyed the video, the quick analysis, both intraday, daily, and a quick update on our stuff. And we will see you next time.